Hey everybody, welcome back. In this video, we're going to go through a lot of the key levels with the S&P, the NASDAQ, and the Russell. We need to go through a lot of the oversold, overbought indicators at this point and discuss what's going on with them. We need to look at the Nikkei as well. This video is always going to be unedited, and I want to show you how we're making money now in the market. So we also need to talk about SMCI, and it's about $150 round trip after hours, and what this actually means and what we're seeing out of DELL. So let's just get to it because there's a lot. The very first thing that we're going to talk about right here is the ES, and we can just see how we're wedged in here. So I'm going to clean off my levels for a second. This is the 55. Now, what we're going to do to start is I'll just make the 55 in yellow so it just glares out and everybody can see it a little bit better, and that's from your comments. So keep the comments coming. That'll tell me how to make better content. You can see the cross right here. So you have a 1255 cross. We talked about this about a week ago and said you have your 1222 cross, so what's next? Your 1255, and then what will follow behind that is the 1255. Remember, if you're below the 12, swing trades are pretty much a bust. If you're below the 22, the bears are in charge. If you were below the 55, you lost institutional support. All that's really left is, at that point, the 200-day moving average. Now, the other thing that I like to do with these kinds of moves, once we start this, what I call like walk of shame, you just want to put yourself in a position here where you just drop an anchored VWAP right to the lowest point that you have. On your chart, usually you use like 12 months, and that's what we're going to do here. And this is the lowest point that we have over the past 12 months, and you can kind of go back and see that. So from this point, which was a demarcation line anyway, because this is when Powell spoke and said rate cuts for everybody, and we still haven't had one. And now we're sitting here, remember back here, we're going to get 7 rate cuts because things are going to change fast, and now this is where we're at with no rate cuts facing this. Worst Fed ever. So anyway, you always drop an anchored VWAP there so you can see what's going on, and that's exactly what we have here, right around that 200-day moving average as well. All right, so that's a great place for us to start. Fast forward into the 1 day, and then what we'll do is just drop this into a 1-minute chart. Now, there's a really important thing to just start with before we get into the sectors and the stocks and how you should be trading this market. This demarcation line, for whatever reason, this 5334, whatever reason you want to guess, we've stopped here right there, and you can see that on Sunday. And guess what? Here we are again at 3 o'clock. So this is our, I guess, line in the sand. A couple things I like, a couple things I don't like. The first thing is you started here, and you can see that line completely cracked from that level. And once that cracked, you ended that trend. Remember, rising wedges always end in, they always end in tears, really. And you can always clone these lines just to see if there's some kind of demarcation in here. And there really wasn't in here too much. Kind of say it's there, but you really broke through it here before, so it's kind of trash. So I really wouldn't say that we had one. I'll leave that there just for now. So then we come over here and look at this longer term trend from this point on to this point, and just see if we have any kind of demarcation line. And we do. And this is the one that I would focus on. So if I take this one out for a second, we'll just leave these up here for a moment and just focus here for the time being. Here's the problem. As that line is drawn, you see how we're playing with that level? You see how we're not able to get over it? Test, retest, test, retest, and you playing with it? So these levels have the same kind of impact of support and resistance. Do they carry the same weight as support and resistance? No, to me they don't. But they carry impact. There's a difference between weighting and impact, right? You would just have different levels of weighting or different levels of impact, however you wish to say it. But this is definitely something that it's worth paying attention to. And a lot of this has to do with SMCI, in my opinion, after hours. And also we should get to the DELL news. But I think we'd be remiss in not going through a couple of these charts and just talking about what's going on. Now, you're already seeing Bitcoin try to bounce and hold this, which has been support before. And you can see right here, and it's trying to be support again. Is it going to be? I really highly doubt it, considering that if the market's going to get weak, this is a risk-on asset, no matter how you shape it. It is a risk-on asset. If you want to say it's an inflation hedge, we don't need one of those anymore. So what is the reason for it to go up? It's either a commodity, which I kind of think that it is, because you only have so many of them, hence commodity. So that's kind of how I look at this. So the question then becomes, what do we do with this and how do we play this? Well, from my perspective, I think it's relatively simple. I think that you put yourself in a position here to win and just let it trade up, and then that's probably where I'd look at shorting some of these names. But let's just keep going through these for the day so we can kind of see where we're at. Now, if you look at the NQ, you do not miraculously just reverse and go up, but you can start forming a bottom. And I do think that's exactly what's happening here. I do think that we're starting to form some kind of bottom. And I'll show you what I mean by this. So if we go to just a plain chart here for a second, it's just, there we go. Thanks for working with me. And we just look at the NQ. Same level, Friday. and then we came over on Sunday. And you see how you kept hitting that over and over again? So this is your demarcation line there, and you can see how this has just been tattered and torn to pieces. And then we would just see this test, this retest of this area. And so that gives us an understanding of our demarcation lines. So if I got rid of just like the simple ones in the middle, I think it's fair to say that these two ranges right now, that's where we're at. And now this is a really important concept that I think people need to get. I don't know that we're going to just fall off a cliff. I actually don't think that's the case here right now, just to give you my opinion. And that's really worth, that and a bowl of soup, because I'll trade whatever happens. But when you look at something like this, it does give you an indication like, oh, hey, we're going sideways. So maybe we're exhausted. Not meaning maybe we're not going to drop, but maybe we're exhausted. And you can see how we're testing that level, and we have not retested this yet. It's my belief that you need to really at least retest these once. And we have done that. Now, if you look at that on the hourly, most people are not going to want to go through that again. That's fine. It doesn't mean that we're going to go through it again. What I would say is it's only 4%. So it's not the end of the world if it happens. And after tonight, you might see more pain. There's a distinct possibility, and we're getting there. We're going to get to that in the sectors in a moment. All right, so if you take a look at this, and we'll go to a daily and drop this down, and I'll clean up off my levels. And then what we want to do is we want to mark that November low, and we want to use an anchored VWAP. And we always want to use anchored VWAP at specific locations, because if I drop 100 in here, then I'll be able to point at one of them and go, aha, see what it did? So you pick places of interest. For example, I think the best spot, or what I refer to as pain points. This is a pain point where somebody puked out the stock and then all of a sudden realized they made a horrible, horrible mistake, and then it ripped in everybody's faces. This is where somebody said, I knew we were going higher forever, and they had to get in. And then you could see how peak anchored VWAP can give you actual areas that you might want to look at re-entering those kinds of shorts, right? All right, so let's take that one off for a second. Now let's go back to this. So this is what we have to deal with. We've tested it, we've hit it, and we've come here a couple times and we've held it. But I think it'd be important, and you might want to consider doing this, just putting a little alert there and saying, hey, if we hit that, I'd like to know about that. That might be something that's important to me, because what might happen tomorrow is we may test that area. What you don't want, forget the lower low. What you don't want is you don't want to close there. Now, we did a really good job the previous day on Tuesday of closing above on this session, above here. We want higher closes. We want to build, but we want higher closes. And if we go here and take a moment, we'll look at this differently. Let's look at it like this for a second, and then we'll flip through this. So here is the Russell 2000, which is actually holding up the best of all of them, which makes a lot of sense. And you can see our levels right here, and we are holding those levels. I would think about this as a dam, because once you break these, let's talk about what VWAP is. Once you break those, you've lost everything. You've lost the average person that's bought since November is now underwater. Well, that's not fun. Nobody wants to be that guy. And all of a sudden, you're going to start saying, what am I doing? I need to get out of these, and I just need to move on with my life. And that's where this becomes somewhat of an interest on something that we have to pay attention to. So with that said, what is the right move for us, and what makes the most sense for us? Okay, we would start by looking at the sectors. And these were the sectors, to me, that held up the best. Now, just disclosure, we have trades on in these, or I have trades on in these, and we did them in the room today as well with DPST, and they held up very nicely. So regional banks held the 55. You have support on the 55. And what you always do with these kinds of things is you just drop an anchored VWAP from that low position and say, oh, we didn't even come near it. And then if you went here and said, how about the home builders? And I'm glad you asked, because the home builders held as well. Now, what you're doing again is finding a place of demarcation, and you're just dropping a level there. Okay, that is a very different looking chart than the SOX, okay, this is their anchored VWAP, and here's my alert set on that, and let's just talk about this. When we got near it, we rejected it today. You have a 12 that's screaming down that you can't break. There's the 22, and if I was to go here and put a line on this, you'll note very clearly, and I'll go to a bear chart, you can't go anywhere near these. You had a pinch. The pinch is over. You're on the other side of it. This means that the average person that has bought a semiconductor stock from that day is down in it. So now when you look at this, you have to think to yourself that that person's going to puke those stocks out. For how long? I don't know. You could just go sideways for a while. See, we don't have to break down. And what happens with these, you usually bust to the upside on a bottom, and then you start regrouping. We're not doing that. We've got this limp, like wet fish kind of handshake going on here, which is just really disgusting. We're not really doing anything. So when we look at something like the SOX, or we go and take a look at more tech like IGV, and we do the simplest of things and mark from these levels and see that we've broken those November levels, and we also would just overlay the simplest of indicators and say we've broken the 55, and we all know that that means that we don't have institutional support. Why are we buying tech? Now, another thing that I try to do is I go and take a look at the Qs, and you can see here again that you've broken here. I use this a lot. You might want to remember this. This is the Qs divided by the SPY. This has always served me very well in my life over trading for a very long period of time, and I finally got it together. So well, I think I have it together. So if you look at these 55s, what I always tend to do with tech is this, and I will get rid of this. If I'm over this combination on the 55, I am more interested in swinging tech. If I am below this, I am not interested in swinging tech, and I am interested in value trades. Now, if you were to say, well, does that make any sense? You could always look at value divided by growth. And you could just look at VTV to VUG, plug that in right there, and then just go, well, geez, that's interesting. And then look at the outperformance of that since then. And you will note that you will get periods of outperformance of value versus growth. And if you overlay those with something like energy, for example, you'll find spots where energy will lead those. And then you'll find other areas where healthcare will lead those areas, or even utilities will lead those areas, which is one of the best performing sectors on the year, believe it or not, right? So this is where we're going. We're going into yield, and that's where we should be paying the most attention. People will look at TLT right now and say, oh, well, we're down and I missed it. The only thing you missed is understanding that they're going to cut rates at least 6 times. So if we look at everything that's going on, what do we know factually, technically, right now, before we get into anything else? We know technically that we are beaten down on tech. We know technically that we are crushed on tech on every metric, and especially on the leading sectors, which are IGV, and they are also semis. If you don't have semis and you don't have IGV, you don't have anything in tech. Now, if we go and take a look at this watch list, which is going to break these down, and I'm going to do them line by line here, and we look at the 50-day moving average, and then we say to ourselves, okay, where do the majority of other stops happen? Meaning, where does the bloodletting finally stop? Where does that bloodletting stop? Okay, here you are in November, and that is a 7. Okay, you are at a 42 today. You just broke the 50 level. Okay, this just is a sell signal. Whenever you break below 50, it becomes a sell signal. Here you are in April 17th. Where was that? 25. Where are you? 49. You just broke 50. Okay, why we thought we could bounce was something like this. When the S5FD, apologies, long day, got to 6, it looked like we could bounce, and we did bounce. Is that the only bounce we're going to get? I don't know. We have to go through some earnings here. You look at the 20-day, and you go, well, here's we were when April 16th. For those that don't remember, April 16th, that was right around this low. And once that starts to form, you can start overlaying these charts with it, and you'll start finding bottoms. But for the 200-day, you're already below that. Now, this is where it gets complicated, because the long end is telling you that you're going lower. And pay attention to this part, because most people don't really pay attention to how to use these, and I'm going to explain how you should use them. When the long end, the 200, starts getting worse than the short-term end, you're starting to lose the market. So when you start losing your 200 days on some names, but you're not below where you were, say on your 50s, for example, like your 50s are here and you're not breaking your 50s, but you're losing your 200s, you want to start paying attention to that. That's a problem, okay? Because that's inverted. You really should not be losing you should not really be losing the 200s unless you're using the 50s. So this is telling you that there's a subset here that's breaking down pretty hard. And the question then becomes, is that going to continue? And the answer is, no one knows. This is where you stopped in November. It was 23. You're at 63. So can this get worse? Yes, I personally think there's a bounce out there. I'm going to give you a couple things as to why I was leading that way. But how you would look at this is to understand that you are losing more names under the 200-day moving average than you did in April. So that when you look at something like this on a relative basis and understand that you're not even at April's level yet you have more stocks that are under the 200-day moving average, you would then have to go on the assumption that the breadth of the market here is worse than here. But is that the case? And this is the other thing you have to wrap your noodle around. And this is where I think the answer is yes, it is worse. Because the RSP tried to get through the 55 today. This is the equal weight versus the market weight, and it couldn't do that, right? Stay with me. We're getting tying this all together. So if I'm starting to lose the equal weight, which was actually what was lifting, right? If you all remember this, and we went through this here, I'll show you. And then we go to here on the SPY, and then we would just go, please work with me here. There we go. Let's go to percent. That'll make it easier. And let's get rid of the pre and the post for a second, and then we'll get rid of this, and I'll get rid of my fancy line. And we'll all remember when this happened. And remember this happened on the 11th, July 11th. And that was that negative CPI. Remember, we never had a negative month-over-month CPI until when? Until we had July 11th. And then the pandemic, right? So that just tells us here, and that's when they flipped, right here. Equal weight started outperforming market cap. Look at the difference in these two charts, okay? And you can see there's a real difference here. This one's starting to lead. This one was challenging highs as this one was taking out lows, right? So we were trying to take out the highs here. You were still trying to take out this medium-term high. You're still trying to break lower lows, and you're still trying to hang on. What you need to watch very closely, please pay attention to this part if you pay attention to nothing else. You do not want to break the zero line on RSP and stay below it, okay? Test, retest, test, broke through. You don't want to break this because that would mean that the people that bought RSP from July 11th have now miraculously done what? Changed their minds, which they're allowed to do. If we lose this at the same time, let's work with me, not against me, and let's get rid of these lines. I'm not gonna have time to edit this, guys. And then if we go here and look at this and then realize that would mean that we would get even more stocks under the 200-day than we currently have. Well, that could exacerbate the whole thing, and that's an issue. Now, what are the signs? You're like, but he said there was good news. I do think that you are forming a bottom. That doesn't mean that you're going to go up, but it does mean that I do think that you're forming some kind of bottom. Now, if we look at what's happening here, you have the VIX that just made a lower low and we went higher. Usually, if you do something like this and there's no other macro or shoe to drop, that's pretty much the end of the extreme moves. And then nobody believes that the extreme moves are over. And then you can start buying the dips again. I think you're there. We had some people in the room that did this kind of stuff today where they were able to buy the dips in Apple and these kinds of trades. I went a different way with it, and I'll show you how I would be trading the market. But what they did here was they're like, no, you came back to these levels. And when you're coming back down and retesting like 200, these bigger levels, they were just waiting for reversals and they caught this stuff and did exceptionally well with it. But what you're seeing again, over and over again, is this. You're just reaching for liquidity. Even when it looks like you're going to go, you're not going. Even when it looks that way, you're not. Now, Meta had a great day and broke out and was, the cat's pajamas today. It kept running up. Do the kids still say cat's pajamas? You can comment on that below. And you can just see how we just fell apart at the end of the day. I actually did a day trade here and we actually made money on it, but it was just a quick scalp. What I keep hearing from people is, oh, I swing trade. Do you? You swing trade in this. I wish you the best of luck, but I don't know how you're swing trading in this. I don't know how you would swing trade in a market environment like this. And the reason I say that is you have no idea, as I went over yesterday, and I'll link yesterday's video at the end of this, I have no idea when this is over. The rumor on the street is this is 50 to 60% over right now. Is that the case? Is that where it is? I don't have a clue. No one's calling me. I know there's a lot more interbank risk than I ever thought before. Here's why I think it might be over. I think it might be over because you stopped going down. Thanks, Rocky. But wait, there's more. If you look at TLT, that's dropping. So the extreme scared, I need to buy bonds in order to hedge my US, yen trade, that's all of a sudden gone away. Bonds are not dropping because they're not going to cut rates anymore, right? Like everybody gets that, right? Bonds are dropping because they went too far one way because everyone was scared to death of that trade and they were trying to hedge it. That's the 10-year yield. What do you see, the 2-year? Okay, so that's what happened here. We went so far one way that everybody got scared. And so now you're reverting a little bit. Doesn't mean that you're not going to roll back over and they're not going to buy more yield, but that's what happened and that's what we got scared. So if you understand that part of it and you understand that the VIX is doing what it's doing, and that might be there, and then there's another equation that I personally use, which is this, and a lot of people use this, and this is the VIX 3-month divided by the VIX. And forget this big wonky thing here. What you want to see is, what other time have you done this? And if I drop this to a week for time's sake so we can move on with our lives, you'll note right here that you've hit it 1, 2, 3, right? And we could say 4 and 5, which would give us a pandemic in 2018 when credit seized up, when they didn't know what they were doing with credit again, shocker. So if we look at these levels right here, and then you go mark what happened from these dates, a year later, you did okay buying stocks, but you had to wait your time. Like, in other words, if you were buying in 08 or you were buying in 15 or you're buying in 18 or you're buying during the pandemic, the first week you didn't do well. You had to give it some time because what people are doing is they're still reaching for liquidity. And this is my point. So as much as I tease everybody about PLTR, especially in the pre-market shows in the morning, and we still have to go through SMCI here, and I do want to go through DELL's layoffs, but as much as I tease everybody, this was a great quarter. Like, this was a really good quarter by PLTR. I mean, it really was. So what happened today? And so what I saw was that people are going to want liquidity. And why are they going to want liquidity? Because they are getting shellacked. So the very first thing that I always do is I drop an anchored VWAP after hours on the first line. And everybody that's been watching this for some time knows that. The other thing that I tend to do in these kinds of days is I will go out there and I want to know certain things. Like, I'll go out there and I'll drop an anchored VWAP from, let's say, here, and I want to know where the players are. And then I'll take the most recent peak, like here, and I will drop an anchored VWAP there. And then when I open up my trade, I'll have an understanding of what's going on and look at how all that tied together. So what you're seeing here, not this one, but these all are up here, and I'll just pull that back because what you have here is this one. I just want to show you what you're seeing. So you're seeing today's, right? Because and then you're seeing the after hours ones, and you're seeing today's. So if I go here and just click off of today's, this one should be today's, I believe. Yep. So that shows you right there. That's the peak. And this is the after hours one. And no, that's the after hours one. I took off the wrong one. Hold on, let me put that back. Perfect. Same line though. Odd. But anyway, you can see these. So what happened today was this. Once I got up into this level, all I had to do was watch. That's literally all you had to do was just watch the action. And you can see on that first bar, you got right to it. Then as soon as you rejected, we put a short on. Here, take a look. Watch how we did this live. PLTR so that you can see this, and you're just completely imploding from that level. That's that anchored VWAP from the previous level. PLTR is toast. That is just absolute toast. That does look like just an outright short at this point if you can't get it together. PLTR, I'm shorting with the high of the day as a stop. I'm going to just use this as a stop here. Yep, that planter's toast. I'm going to add to that short. You got right to that level and rejected. So we'll see how that goes. I'm not going to keep getting in and out. I'm just going to watch. If you get over this, then I'll just close it. I'm actually in right around there, so I don't really see a reason for me to keep getting in and out today. So right into that, I pulled something out, and I'm just letting it do its thing. And then what you would do is just keep watching, and you can move the stop up to here on the short. Make sure you're pulling money on the way down. You got to be pulling it out on the way down, guys, because you know that they're just going to snap you at some point. So then we would want to just watch this level. This would really be the next. You got a couple little spots in here. I'll mark the whole thing off. You got near there, you seem to have buyers. So let's just watch that. Right into that close. Still have some, obviously, but right into that, I pulled some out. Oh, boy. Trying to bounce you. Yeah, you're trying to hold here, trying to hold that level. I'm going to pull more money out of PLTR. I think our party might be coming to an end because I think they're going to diversify out through RSP. Boop. Out of the short. Yeah, I'm out of my PLTR short. Now, I hope you found that helpful. One of the trades that I do a lot is I had calls, and I showed this yesterday. We had calls going into SMCI. And what I did was I had the 600s or 625, 600s, I think. And what I did was I rolled them up into the 650s into this call. So I locked in the profit. We were up over 100%, I think, or close to 100%. Locked it in, and then the news comes out and the stock rips. The problem with the news is they missed, and they missed on revs again. They did the 10-for-1 stock split, so the stock went up. The problem was the margins, and I'll show you this in a minute. But what I do when I have calls like this, and I'm going to definitely do this on Saturday in detail, and I'll do a whole video on it if there's an interest. Because people are like, how do you hedge your calls or puts after hours? Well, if you have what people don't remember about calls and puts is the reason they exist is because you're supposed to use them to hedge. That's why they exist. They're not just speculation, they're to hedge. So if I have calls here at 650, that gives me the right to buy stock there. I have that right. So if I go to 725, I have the right to sell stock there just because. So I'm selling stock here, which is what I did. I actually will short in here, and I'll just show this on the timestamp. So what I did, it looked like I locked in 90 points when we were up here. And all I'm doing with that is just locking that in. And I put the hedge on again around the 700. So what I did was I put the hedge on, and then when it dropped down, I locked in 90 points of it. So I'm putting it in up here, and then I'm locking in 90 points on the way down. That's something else that we were trading, this LUMN, which had a good quarter. But what we're doing is I'm hedging here, and I have the right to do that. So even as it drops, I can just leave it short because I have the right to buy it back. So I'm completely 100% protected at that point. I've locked it in, and any extreme move is gravy. Now, I got out earlier, and I didn't catch the rest of this, and currently seeking this. I would say I'm probably net short right now with the position, but overall, here was the problem with the quarter. And I really want to get this home because I did this on CMG, and people were saying, how you closing your calls after hours? I'm not. I'm hedging them, right? I'm actually using the call for what it was supposed, the intended purpose of the call, which is the right to buy stock at a specific time and price. That's what I'm doing. I do think I'm going to do a video on it if there's enough interest. So comment below if you're interested in that. It saves you a lot of money because I didn't do it with the whole trade. I did it with half. And that half was enough to pay for the entire calls. Now, do I make money net on the whole thing? Probably not, looking at where I'm at right now. I'll probably break even on it with the way that I closed it to make a little bit of money. But it paid for the whole thing. And if it went higher after the call, I have the right to take that stock off. I could have added more to that and wrote the whole thing down, right? You have a lot more optionality. Now, for time's sake, we're going to get right to it. So this guy did a really good job of being Captain Obvious, but he really hammers home the key points that I talked about. I was shocked that they actually had margin interest. As a matter of fact, I even commented that with their guide higher, there's no way that they have margin problems. And then guess what? They had margin problems. And a lot of people are going to have a tough time with this. A lot of people are going to have a tough time swallowing that they're not having real issues, and I'll explain why. The initial aftermarket reaction was better than I thought. You can see we went up to 723 and then pulled all the way back down. Now you're at 730 or 536. So I mean, you have a 200-point move after hours. But as you dig into the numbers, all the actual misses, especially much lower than expected gross margins, they were able to mask a lot of this on the tape right away. And people didn't get it because they hit us with the 10-to-1 stock split and they raised guidance. And they led with that on the tape. So they knew what to release first. And then you start going through it and you're like, well, wait a minute, they just missed. So that's not ideal. And as you start digging into these numbers, the actual miss, especially the much lower gross margins, that's a problem, and I'll explain why. It actually gets into it. Makes money managers question whether the management can effectively scale and handle the growth. An executive on the conference call said that the margins will return to normal before the end. The company's fourth quarter gross margins was 11 compared to 14. They're saying it's due to capacity constraints. So here's the thing. You are either mismanaging the company or you can't pass through the costs because NVIDIA has capacity constraints and their gross margins went from 64 to 75. So if you're paying more for parts at SMCI from your vendors, and then your end customer is not paying for it in AI, something doesn't make sense. And this is the concern that I have on the hardware side, because this is just what I would refer to as another red flag, because your margins are way off. So there's huge demand out there. We know that, right? So we already know there's huge demand. Meta said we're going to buy everything. Microsoft said we're going to buy everything. Amazon said we're not slowing down. All of these companies, Google, they're the hyperscalers, those four companies. 38% of all CapEx for AI in the S&P 500, 38% is these 7 companies, 6 companies, something like that, right? So we know that. And then you go over here and they're saying, yeah, well, the margins are off. Well, why are they off? So something doesn't add up. And then if you keep going through it, then you look at Dell. And this was the problem. I'm currently short Dell, just disclosure. But if you go through Dell, this happens. And this was floated out there. Well, things are so great. Dell makes cuts to boost AI pivot. So things are going so great at the company that we have to lay off 10% of the workforce because we're going to AI. So there's so much demand for AI that you're not going to retool these employees. 12,000 people are not going to be reallocated to AI. They're going to be moved. One former employee calls it a bloodbath. It sounds like a bloodbath, doesn't it? So when you start to look at this on the hardware side, are we seeing actual cracks? And I think you have to take your glasses off, your rose-colored glasses, which I love AI, talk about it all day long. But I think you have to look at this a little differently and say to yourself, what's really going on here? And you don't have gross margin issues. You're welcome to comment on this below. But if things are going great, like Apple, for example, and I'll leave you with this thought. When Apple had a car business, and then they realized this is silly. Why do we have a car business? They moved everybody to AI. Dell's not moving everybody to AI. They're laying 10% of the people off. And SMCI missed its margins by 30% off the estimate. That's it.